All right, welcome everybody. This is Dr. Keith. How is everybody doing? Happy Thursday. All right, can everybody first all hear me okay? And do you see my Thinkorswim charts? Let's make sure before we get going here. Good to see you all. Thank you, Bill. Glad to see you got that 20 too. I'm glad we're good to go on that. Okay, so one of the things that I've been doing for almost 15 years now is trading using seasonal influences. And it's been one of those things that over the years, I consider myself a diehard seasonal person. If I don't have a seasonal play, an advantage based on what it's done in the past, I don't use it. I like to trade other things then that have higher influences. So I really just wanted to do a webinar today with no PowerPoints, just going to charts here where I can kind of show you again how I use it, because on my Wednesday videos, on my live Wednesday seminars, I don't always go specifically through each of the indicators. And I always get a lot of questions on the seasonal indicator. So I figured I'd walk you through my seasonal indicator and answer any questions at that point. Okay. But to me, again, if you don't know what an underlying, whether it's futures, Forex, stocks, if you don't know if there's a seasonal move coming in something, I honestly believe no matter what your trading style, you're putting yourself at a disadvantage. Okay. It doesn't mean that's all you have to do is trade with seasonality. I've got a lot of clients that use that as part of their toolbox. They like to know what the seasonal movement is on something. Okay. I'm not here to tell you exactly what to do by any means. What I wanted to show you today, though, is just a good package that I have that I think is extremely useful on you helping pick direction based on your style of trading. Okay. So with that, again, I really want today to be what I call a working webinar, where I'm just going to show you, my live charts here, show you some examples and how to read this seasonal indicator. Okay. So what I'll do, and again, I didn't put a lot of my products on here. Okay. And I did that on purpose because what you see on this screen is what I'm going to offer a special at the end today. So I've noticed in the past, if I put things on there, like some other seasonal stuff or a different oscillator, then people get confused on that for the package. So today I'm going to show you exactly this package and how you can use that to help yourself in regards to which direction and when to take those opportunities. So what I like to do first here, let's actually start. I'm going to just tear this apart a little bit more in the middle here. Bear with me. Okay, so over here, folks, this is a weekly chart. Okay, all my seasonal data is based off of weekly charts. Now you can change that to monthly as well, but I do not switch it to daily. Okay, I feel that when you're comparing daily to previous years, the data is not as valid. It doesn't seem to translate nearly as well. I always keep it on the weekly. Okay, that's how I use it. That's how I designed it to be used, or higher time frames as well. If you're looking at a position for several years, you can go off the monthly or the yearly. Okay, but this is a weekly chart right here. Okay, and when I talk seasonality, okay, some of you may be new to the term in general. What does that mean? Okay, well, really what it comes down to is when I call, hey, there's a seasonal move on something. Okay, really what that's telling you is that there's a high likelihood it's going to go in a certain direction. And where's that data coming from? It's coming from the past. Okay, so as long as a particular underlying has been acting like it should currently from the last 10 years, as an example, then when I get my triggers, which I'll explain here in a few minutes, I'm willing to take it. Okay. So again, it's the likelihood of something going in a certain direction based off of the past. Okay. My indicator is defaulted to 10 years. That's what I use 99% of the time. I find the 10-year is a great average to give you the moves that are coming, okay? You can add the indicator more than once on your chart. So you could have it and then add a 5-year, you could add a 15-year, a 20, as long as the stock has got, or Forex or ETF has got that much data, has been around that long, it'll give you that projection, okay? What most people do is they start with the 10, and then if they want more, they'll put the 5 on as well, just to see if the 5's been matching the 10. But really all you need is that 10-year average, okay? So let me explain this just a little bit, okay? The green line, the green dotted line is the projection. Remember, it's the weekly projection. So when you look at a stock like Broadcom, AVGO, okay? What this is saying is that between right now and the next, what month, till the week of 4/19, this is the weekly chart. So you can see at the bottom, the week of 3/15 is this week until roughly April 19th. We go down a little bit or sideways, okay, generally speaking. Then we had higher, okay? Then we had higher from the week of 4/19 and top right around mid-June, okay? And again, you can go further out. I can scrunch this up for you, okay? You can go further out here. You know, where can that be useful for you? You know, those of you that like to trade options, for example, you can look at the peaks of where you have your option expire, right? That gives you the how far out you want to do an option play. Okay, that can be extremely useful. That's how I use it all the time with options. Okay, so basically it's showing you, and what you have to remember is the seasonal data is being calculated. Okay, I have it so the more recent it's a net moving average, where the more recent the exponential will count it. But generally speaking, again, you're given the average from the past on anything that you want to look up. Okay, now the value of this is obvious, right? Why short something, for example, if you have a big move up coming? Okay, what you should do is wait for that to retrace and then take it in the long direction. Okay, and again, I'm going to put this all together at the end, at least hopefully I do. But so again, the way it works is where the green dotted line starts, that's this week. Okay, so the projection is this. Okay, so we head down or sideways just a little bit, and then we head higher. What I like to do is I like to look at it from left to right. So from left right here until this peak, it goes higher. Okay. Again, it doesn't mean that exactly 1 week from now is going to go lower and then it's going to head higher, right? This is a projection. So you need to understand how to read these projections. When I had a trigger, which we'll talk about here on the stochastic, right here on this arrow on 3/9, okay, I like the opportunity. Why? From left to right, Broadcom heads higher, right? It heads higher and then much higher typically. So when you're in an already uptrending market of Broadcom, we have the retracement and now we get the trigger long, okay, with matching the big picture seasonal move. Okay, I'm all into that type of opportunity. Okay, that's how that can really help you. And I'll talk about this green in a minute as well. So again, the forecast is the green squares here. Okay, the green dotted line. Now, actual price is the green and red line, right? Everybody probably understands that. So that's telling you that this is what has actually happened up until today, right? This is a weekly chart. So the next bar will open up next Monday. Okay. And so if, you know, wherever price ends up going over the next few days for next week. But what's been missing for many folks, in my opinion, okay, here's what I believe is missing in a lot of seasonality programs. The lag line, okay, this white dotted line. What this is telling you back, and I have this to 12 weeks, Okay, you can go back even further. I like 12 weeks, and I'll show you how in a minute. Okay, but what this is showing you is from the week of 12/21, you see the cursor at the bottom, the week of 12/21, basically until this past week. Okay, that's what should have happened with price as a prediction. Okay, this is your prediction. Then you see what actual price did. Okay, it's never going to match perfectly, but the point is the white projection was saying it should go higher. Price from left to right went higher, right? So from left to right higher, actual price from left to right higher. So it's acting normal, okay? If you have to turn your head sideways like a dog does, it's close enough. It's acting normal. So what that means is seasonality works the best when a particular stock or a particular future or a particular Forex is acting normal, okay? So when I got this trigger, knowing we have this seasonal move coming, folks, that is a high probability trade. Nothing's guaranteed in life, I wish, but you're giving yourself a much higher probability versus shorting this right now, okay? Versus shorting. If this happens to go lower, it's just going to give you another entry point here in the near future, right? You can trade multiple times on a particular underlying as you get your triggers, okay? Okay. So that was just one example. We're going to go over several so that you can get the hang of this, and then we'll talk more about triggers and everything else, okay? So let's talk big picture. Let's talk spiders, okay? So obviously we've been in a bull market, so you should suspect that, you know, the green line is going to be heading higher, okay? Typically on my Wednesday webinars, so those of you that aren't part of my Wednesday webinars, remind me, and at the end of this, I'll make sure you have the link. It's a free webinar I do every Wednesday, okay? But you can see here, from left to right, the white is the forecast based on what's, you know, what has happened in the past, right? So we typically had higher the start of the year, very bullish, right? And then right around mid-February, we have a decline, okay? From mid-February to right about now, we have a decline in the markets, okay? This is a spider, okay? The other decline that typically happens in the market is July, okay? These are the biggest 2 months, in my opinion, based on what we've seen, that I look for short plays. Other than that, I'm a bull right now, okay? But my point is, then when you look at the SPY here, okay, then you need your timing indicator. So this is a daily chart, which I'll go over more of in a minute, but I'm just trying to demonstrate a point right now, okay? You've got your daily chart. And then when this red arrow on the stochastic triggered short on February 10th, okay, this is an opportunity to start looking, knowing we typically have a short time in the market coming, okay? This move down right here, I know the news makes all the reasons why, right? It's the Chinese fighting, it's COVID, it's this and it's that. Okay, this happens almost every year, folks. Last year it happened, they blamed it on COVID. Certainly it played a larger role last year, don't get me wrong, but it just is what happens. And why is that? Okay, that's when institutions tend to take profits. They tend to offload some of their portfolios, take off some of their losers, and then once we get the dip, they buy again, which is right about now, folks. Between now and the next 3 weeks, okay, you're going to see higher prices with high probabilities, okay? Again, nothing's guaranteed, but that typically is what happens. So this dip here, okay, and if you go back and watch some of my YouTube, my Wednesday webinars, what were we doing? For the most part, we were sitting on our hands if you don't like to short the markets, right? We were sitting on our hands just because of those type of probabilities. That's what the seasonal indicator can give you, okay? And now, basically what I'm looking for, you know, on the spider, we hit new highs, okay? So now what I'm looking for is a dip to go long again. I'm not looking to short this, folks, okay? Doesn't mean you can't. It doesn't mean it won't work, but I'm not going to go against the higher probability move, because if this falls back down and has, let's say, a test of the bottom Bollinger Band again, yeah, I could have made some money, but the odds are it's not going to go that far, okay? But more importantly, if it comes back, then I get a new trigger long, that's the higher probability trade, okay? And that's what I look for, the higher probability trades, okay? That's very important, okay? Okay, let me bring up just a few more to show you. Let me bring up the Forex pair, because you can do it on anything, okay? So here's an example of Forex, the euro yen. So again, this is the weekly seasonal, right? So from left to right here, between December 21st and January 25th, we typically had higher, right? And then we kind of go down a little bit, consolidate, and then we had higher. So we've been in this uptrend going back to the daily chart then, right? The daily is my trigger, folks. The weekly seasonal is my setup, right? You need your setup to your trigger. So the reason I wanted to show you this chart was from left to right, we go higher. There should be no surprise this year's acting like it normally does, okay? But here's another way it can help you. Again, looking at this daily chart. When do we top right now? Right around the week of March 22nd. See that? And then we head lower. This is the euro yen, okay? So we're hitting new highs right now. At any point between now and the next couple of weeks, we're probably at a top, okay? Because this is an acting, pretty normal. It's been a little bit stronger, okay? A little bit stronger, but it's been acting pretty close to normal. So at some point, if you just kind of watch your charts over the next month or two, okay, you're going to see more than likely this pair head lower, okay? Some ways of playing that, because you're in this trend to the upside, right? Again, this is the daily chart over here. These are just standard Bollinger Bands. What you'd want to see is a more conservative trader, let this start coming down, okay? Maybe not take the first trigger because you're like, well, I don't want to go against the trend, Keith. Okay, I can understand that. Wait for it to come down, head back up, and if that next move down is a lower high, okay, that's a good opportunity for you to go short on this pair, okay? That way, if it just continues to climb, you're not getting yourself in trouble. But big picture, we know this pair should go lower in March, okay? End of March, basically until midsummer, this pair typically has lower, okay? How cool is that to really understand? The other thing you can do is you can always go, instead of a daily chart, folks, you can go to a smaller time frame and have your bias based off of the seasonal move, right? You go to a 4-hour chart and take triggers in that direction if you want, if you want that. No, Raymond, I don't. Basically, I have my seasonal packages right now for Thinkorswim and TradeStation. Okay. I will be doing more in the future, though. Okay. So, nice thing about Thinkorswim, though, folks, is you can open up an account, fund it for like $50. You don't have to use it, right? You can then use your other broker to place the trades. You can use the charting on Thinkorswim. That's what a lot of people will do if they don't want to use Thinkorswim as their broker. Okay, so in this case, let me bring up another one, and we'll kind of keep summarizing here. Okay, let me bring up another Forex pair just to kind of mix it up a little bit, because it doesn't matter what we're looking at. Okay, so here's an example, the AUDCAD. So from left to right, we head higher, right? Big picture on this white, right? You're looking at the white line. From left to right, you draw a line, it's higher. So back in December, you're looking for longs, okay? And right here, you have a cross on 12.8, where you see this yellow arrow. It's kind of hard to see. You had another cross right here on 121, okay? And this stochastic is what I'm giving as part of this package today. That's why I'm showing it, okay? I use other methods as well, Hakanachi, everybody knows, but I wanted to be clear on today's package. So these are your potential entries. But what's cool now is, so we're basically topping right around April 12th, right? So we got another trigger here, long, and I like this for a couple of reasons. Long, right, is stretching that bottom Bollinger Band. We're going to probably have a bounce, right? But we'll probably maybe retest over the next couple of weeks, possibly on the AUDCAD, but then I'm going to start switching my bias to the downside. Do you see that? So from April 5th to roughly May 10th, and bigger picture from left to right, all the way until September coming up, I'm looking more for short plays on the AUDCAD. So I wouldn't be surprised if this heads up, retest those highs, right, and then rolls over for us. That's what it's done in the past, okay? So let's see here. I'm trying to get this chart aligned for you. So last year, when we hit April, let me scrunch this out. We were in a really massive uptrend on this pair. See that? So what would have happened is, as I go back to current, okay, what would have happened is when this white line, when actual price isn't following the white line at all, okay, then you want to skip the trade, in my opinion. So let me give you a really easy example of that recently. So nice move down in oil today, huh? So back in December, what should have happened left to right on oil, okay? And by the way, this white dotted line is just showing you the baseline so that you can then see, oh yeah, it goes lower in this case from the baseline of the 12 weeks back, okay? But from left to right, oil typically heads lower, right? Yeah, you have this bounce in February, but big picture, lower. Well, what happened this year since December? Oil's been going higher, right? So when we started getting a potential short play in February, short, okay, I said in my webinars, I'm not interested because oil has not been following its seasonal pattern. It's not acting normal. I'm going to skip it because there's so many other things to trade. You want to find things that are normal, okay? So when people say, seasonality doesn't work, okay, the years that it's not working for a particular underlying, you're absolutely right. So skip it, okay? Let me show you another one. Dominos. And I did this trade as a small size, knowing, here's the point, folks, knowing it was more riskier. Let me show you why. I love trading Dominos in the start of the year, okay? See how left to right, it should have went higher. You see that? Very clearly. But what did it do? Very clearly, Dominos was going lower, okay? So in my public alert service, I took this as a smaller size because one, there was more risk because Domino's wasn't acting normal, okay? I don't care why. I don't go read up on every news on every stock that's out there. That's just not my style. This is like a built-in news because all this is telling you is this year, if you take this trade long, you're giving yourself more risk because it's not following its typical pattern, okay? That's a very obvious one that it's not, right? That's why I love showing this as a lessons learned. What I do is if I'm still greedy and want to try to grab that move because I like it so much, I go in smaller, okay? I go in smaller size. But for new people, what I'd recommend, let's say your trigger was back here on let's say January 20th, okay? Right here as a long play. So you go back here on the week of January 20th and you see, well, wait a minute. From left to right, normally Domino's is going higher. This thing's been going much lower, okay? This is a very obvious one. So I'm going to skip this trade this year, okay? That is how you can save yourself from some pain. Not every stock, not every future, not every Forex is going to follow its pattern every year, folks. But most of them, when they do, it's very obvious and you can make really good money doing it, okay? So one of the questions I get is, well, what is this green over here, okay? I had this program to just basically tell folks, I like colors, okay? I know a lot of you that know me well laugh at that. So what happens is when we get into September with Domino's, okay, typically when it breaks through and it breaks out and makes bigger moves. This is my big move color coding, okay? It's my own proprietary code of what a big move is. Okay, but basically it's almost like a breaking out of a squeeze, I guess, to put it in layman's terms. Okay, but all that's showing you is obviously if you get a trigger back here on the daily in September. Okay, so let's go back to last September. Okay, September. So we had a trigger on 9/10 right here. Okay, right here, and that was a good trigger. Okay, see that? That was a good trigger. So that's why we have the green, okay? But I still wait for triggers, folks. You gotta wait for triggers, okay? This is a beautiful trigger, but that's what the green is, or if it's a short play, you'll see red as well, okay? All right, so let me bring up some others just to keep kind of showing you a few here, and then I'll also answer any questions because that's a lot of times where I can understand what are people not understanding. So I'm going to bring up some futures as well here. So this is lean hog. And I brought this up to show you that from left to right, we had higher, so especially right from the week of January 25th, we had higher. Makes sense? See the white line, the forecast? Okay, it's one of my favorite trades every year. So again, we got a trigger on 111 here. Okay, if you got in this trade on lean hogs, okay, you're a very happy person right now. Okay, but you don't know how large the move is going to happen. Nobody does. But my point is, hopefully, if you see the seasonal move coming, you didn't want to short it. Okay, that's the real key, is try to keep yourself out of trouble. Okay, and then some of these moves are going to be phenomenal moves. Okay, phenomenal moves. And so hitting new highs right now on lean hogs, if you go do your research, there'll be reasons for it. Hogwash. I'm sure there is. It doesn't matter though. Year in and year out, lean hogs go higher this time of year. Okay. This is my built-in, this white line is like my built-in news indicator. It tells you what it should do based off of the last 10 years of seasonal movement. Okay. Now, again, you can go and play with this. So if I click on the cone here, okay, here is the open information where you can change it to 10 years, to 5, to 15. You can add more than one on here. Okay. I like to keep it simple. A lot of times I'll add the 5-year as well. And what I look for there is if the 5 and the 10 are matching, okay, then we're good to go. Okay, so you can always add and have more time, more years of seasonal. Some stocks don't have 10 years yet, so you might want to look at the 5-year on something and so forth. Okay. RBOB gasoline. In fact, before I forget, let me go back to RBOB a minute. So on the 10-year, if you put something in that doesn't have 10 years, like let me put Facebook, okay? It has a 5-year, I don't have it on right now. But if it doesn't have 10 years, you won't see anything. You see that? It says insufficient data according to your inputs. You need at least 10. But if I change that input to 5, it would show. Okay, so you can have a 5 and a 10. You can put a 20 if you wanted, and so forth. Okay. All right, Nvidia, right? So first of all, you look at a stock like Nvidia, and what you're probably saying is, again, so from left to right, we should have headed higher on Nvidia, and it started higher, and then it's made a nice push down. So it's actually trending lower right now. So in this case, okay, if you take this long play right here on March 5th, because let's say you like it for a longer term play based off of this fantastic forecast, okay? What I would suggest is go in smaller size. That way, if it doesn't go in your direction, because it's not acting quite as normal as I like to see, right? You can always add in the future, or you just skip it for later when it starts normalizing more, okay? But the key is, this is what it's telling you right now. We typically had higher, we started higher, and then during this February move down, it came down further than what it normally does, okay? But it should have come down as well, right? So you can also say, well, it's close enough. I like this, okay? The ones that are easier to identify as not following is like that USO, right? Because it wasn't following its pattern, or Domino's wasn't following its pattern. Okay, it was very easy to understand. If you have to turn your head sideways, it's close enough, folks. Okay, it's just telling you the tendency. So, if you got in here on this trigger with this stochastic here on this green arrow on 3-5, okay, what are your plays for this? Well, if you're doing options, what kind of option play? I guess whatever you can afford, because it keeps going higher this year, right? So, maybe you look at, okay, I'm doing an option with a November expiration, okay? Or you're like, well, I can't afford that. So maybe I do a May 24th, or right around the end of May expiration. Okay, that's where this can help you identify what are some areas and how far I want to go out on my expiration. Or if you're trading Forex, for example, you may just want to stay into the trade as long as you can based off of those type of seasonal moves. Okay. Excellent. Okay, let's see here. So one other thing I want to talk about a little bit now as well is the radar screen here. So part of this package today with this stochastics, right? My favorites are the triggers in the direction of the seasonal, right? So even though if you get triggers short, if it's not matching the seasonal, then I don't like it, okay? But that's up to everybody to decide. But the stochastic here will show you when it turns yellow for a yellow short, right? That's when the yellow arrow is pointed down. A red short is when the red arrow is pointing down, a green long, and so forth. So you can look at something like, you can run this every morning if you're trading stocks and say, okay, what are my longs for today once the market opens up? So you type in, you click on this one right here, you see the green arrow. Okay, that way you don't have to go through hundreds of stocks on your own if you don't want to, right? You can just look at the ones that have triggered, and then what do? Here's what I do. I look to see if there's a seasonal move in my favor. If there's not, I'm going to go to look at something different. Okay, that's exactly how I trade, folks. Now, this is a penny stock. Okay, I'm just showing. Obviously, I'm not trading this anyway. So let me see if I can find something that today there's not as many longs because the market's been heading lower. But so here's a yellow long because you can see it crossed back over here today. Okay, right here. Let me blow that up to show you a little bit better. Okay, so right here. First and foremost, these are my favorite, right? When it gets below the green line and you get the green arrow, right? These are the highest probabilities. It also came down to the bottom Bollinger Band. But like this one, if you want to be more aggressive, okay? At least you know that from right now until until the week of April 5th, generally speaking, this heads higher before it falls off, right? So at least then you're getting into a stock that typically goes higher until April, right? If this wasn't, then just ignore it. Just ignore it. Make sense? So you can find these type of triggers long and short every day. This updates after the market opens at 9:30. If you're trading futures and Forex, as soon as those markets open up, that updates. Okay. All right. So I wanted to leave plenty of time for questions because I'm recording this. I'll send it out. I get a lot of questions on my seasonal information here. So what questions do you have, or is there something you just want to look at the seasonal? Go ahead and type them in. Some of you might just be curious on something like Netflix. Okay, so interesting about Netflix, right? Typically from left to right, we go higher, right? And it did, they're hitting new highs. But then lately it's been heading lower. And Netflix doesn't usually do that, okay? So again, if you're looking for a long play on Netflix, like right back here on 3.9, realize there's more risk right now because it's been actually weaker than what it has in the past, okay? So again, you see how that can be so super useful? Yeah, it typically goes higher here. If I was doing an option play, right, I would do it for roughly a July expiration, or a May expiration. But I'm going in smaller size if I'm going in right now because lately it's been weaker than what it has in the past, okay? That's one of the biggest points I want you to take out of today on how seasonality can help you. It's the ones you can identify that's not working normal, skip them for right now, okay? Yeah, so again, the Green Mountain is just, it's kind of a special sauce I have. You know, I basically call it the big move, where typically during the green, you have times where it breaks to big moves, okay, based on what I've defined my, my definition of a big move, okay? I like colors. So, Netflix going into April here, okay, at some point, you'll be on your chart saying, holy crap, look at Netflix, it's going up higher and higher again. At least that's what it's been since the last 10 years, okay? Yeah, I can look at XLK. Yeah, we'll look at bonds next. Great one to talk about. Okay. So XLK, you can see here that we typically from 215 to 315, right? Big picture, we had lower. We did that this year. So it's acting normal, right? Acting normal. And so now what I'm looking for in this case is the next, what I would love to see on this is a long play where the stochastics come back below the green, right? And then come back above, give me a green arrow. I'll be all over that. Makes sense? That's exactly what I'm looking for, okay? So I'm just patient. And the nice thing is when you get that green arrow down here, whenever that is, it'll show up here on your radar screen as a green long, like this one, right? So that you won't miss it. And then you can look at it to see if that's what you want, okay? So somebody asked a question about bonds. Let me bring up I'll bring up the 10-year futures, okay? I've talked a lot about these in my weekly Wednesday webinar, okay? So again, look at this, folks. Typically what happens on bonds from the week of December 21st to right now, we go higher, not lower. Big picture, right? Everybody probably agrees with that. That's what this dotted line is showing you. We go higher from the baseline. Obviously, bonds have been much weaker, just like the oil, okay? And so what I said on my Wednesday webinars when we were getting triggers long was, there's no way in hell I'm taking a long right now on bonds, okay? There's a reason probably for it, right? Some of you've done your research and you could probably give me a good argument on why bonds is heading lower, right? Bottom line is, I don't really need to know all that. All I know is this underline right now isn't acting normal. I'm not going to go spend hours on every stock that's not acting normal. I'm just going to ignore it, okay? At some point, it'll probably rebound, okay? But until I start seeing it following its pattern a little bit better, I'm not making any trades on bonds right now, folks, okay? There's plenty of others to trade that are acting normal, okay? You could say, okay, well, Dr. Keith, since it's been weaker than the seasonal, can I short it? Absolutely, okay? But then you're fighting the overall, what's been happening in the past. There's some risk involved there too, okay? So I don't short it. It doesn't mean you can, as long as you know that you're going against the grain over the last 10 years in this case, okay? It doesn't mean it won't work out because it's certainly weaker right now, right? But I go to other underlines that are acting more normal. Does that make sense, Imran? Great question. Yeah, so one question is, what about setting stops? And obviously you have to have a process for setting stops. My main goal today is to show you the indicator and not confuse things, okay? But typically how if you let's say you get into a long play with this system here. So let's say you entered in right here on 111 because you got a green arrow, okay? Once you got a yellow arrow pointing down or a red arrow, okay, if you were losing money on that trade, that would be a good exit point, okay? Keep your losses as minimal as you can, okay? That would be an easy strategy if you're using this stochastic, okay? I like to use other things like Hackenacci and so forth. I don't want to confuse things today, okay? But you absolutely have to have a plan before you take a trade. or you're just putting yourself, as uncertainty, okay? But, as an example, let's say you took this long trade right here, okay, just as an example. If it didn't work out and then you got the yellow arrow here short, then that would be a good opportunity for you to exit because it didn't work out, okay? That's a simple strategy that I think you would find effective, okay? That way, when you make the trades that work out well, you can stay into the trade longer, okay? Okay, so a couple of things while you're kind of, let me see if there's any other questions. So I'm going to put the special in the chat, and this will be sent out to everybody as well, but you can take a look at that. Let me also bring it up here. I think I have it. Let me see here. I think I have it right here. Okay, so the special I'm doing right now is the seasonal, everything you saw on that screen, the seasonal indicator and the stochastic with that script scanner, okay, the watch list, okay, for $14.99. Okay, normally that's double that. Okay, now this is a lifetime license. Okay, once you have it, it's yours forever. If I update anything, that's always part of that. Okay, now the way the seasonal indicator works is it'll update for you. Right? You don't have to say, get it every year because it's got to get the updated data. This updates all the time, folks. Okay, but basically you're getting, so again, what you would be getting for the $14.99. Right, the seasonal indicator here. The Bollinger Bands are standard. You can use on Thinkorswim. You just put them on yourself. And then the stochastic that I've modified and the watch list script here, so you can look for longs and shorts. Okay, that's all part of this package. Okay. What I'm also going to do is in a couple of weeks after all the purchases are complete, I'll hold another webinar that I can answer any other questions you might have. Again, those of you that know me or those of you that may not know me, my real goal is you understand what you're purchasing, what you're using, and how it can be effective, okay? So I'm more than happy to have another meeting in a couple of weeks, answer any questions, and make sure that you are good to go, okay? The bottom line here, folks, though, a big takeaway, whether you purchase something or not, is I don't really care. What I really want you to understand, though, is when you look at something, let's say Ford Motor Company, okay? Look at the seasonal on Ford here. So typically, Ford has been heading lower, right? Now it's been heading higher, right? So what is that telling you, okay? Typically it has lower, it's been going higher. You don't want to get in front of that. You don't want to short that, okay? My dad retired from Ford, so I hope it keeps going up, right? No, but that's how this can benefit you, okay? You're going to know on one screen, not having to go to different platforms, what is that seasonal move, okay? And again, I can add this, I could add this again and have a 5, it will look the same with a 5-year, you could add a 20-year, you can get as geeky as you want with this. I like it simple on my screen, but you can add as many seasonal time frames as you want on here, okay? All right, folks, well, again, I hope regardless, it at least got you interested if you're new to seasonality. If you have any questions, reach out to me. I'll put in my cell phone as well. I talk to people all the time. I'm not here to hide on you. That's my cell phone. You can text me. You can email me. Let me put my email. It's Dr. Keith at seasonaltraderpro.com. I'll answer your emails. But if you're not on my Wednesday webinar, reach out to us. If you go to seasonaltraderpro.com, we put one more website in there, seasonaltraderpro.com. The front page, let me just show you. If I can type, right? Okay. So from my main page here, if you just go down to subscribe, okay, you'll get my favorite trade of the month and so forth. But right here, the weekly market analysis. Again, I do this every Wednesday, most Wednesdays anyway. It's free. where I give you the overall, what I see in the markets and that, and then I record it. So if you sign up for it, even if you can't attend, you'll get the recordings. And once you sign up once, you'll get it every week, the new link until you unsubscribe. Okay. Absolutely, Bill. I'm glad that it was useful for you. That's really the key is, it's another tool that you can help, whether you're not, I'm a seasonal crazy person. That's all I really use. I need to know, but it doesn't mean that's how you have to be, but it certainly can be useful to keep you on the right side of the trade as well. So with that, folks, oh, one more question here. I'm sorry, I missed them. Ed, so yeah, only because that's part of the package today. I notice if I put other ones on there, then that gets confusing. Raymond, what do you think about the pandemic with skew seasonality? So let me just address that real quick. Okay, I get that. That's a great question. Let's see, but here's my point on it. Okay, that data is going to be digested. So if you look at something like, let me bring up the S&P 500. Okay. Remember we talked about this move down, how that was predictable right here. Okay. Well, this is what it looked last year in February as well, right? So when you go back and you look when the markets, I got to go back further 1 second. Okay, so when we go back to the COVID crash, people call it, right? You shouldn't have been surprised we were going lower here, okay, just like we did this year. What you never know, folks, is the extent of it, right? The extent of it, okay? But, we then hit new highs, right? So no, this would have kept you, some people caught this short based off seasonal moves, okay? But what's important is, it's updated every year so that when you look at, the updated seasonal move on something, okay, if it's changing over time, the indicator is going to change over time. And remember, what you're looking for is not going to match absolutely perfect. That's impossible, folks. But where it's going to help you is give you the overall clear direction based on what has been happening, okay? And that's the key. Okay, so seasonality's been around forever. It's going to continue to be around forever. Okay, you just need to know how to read it. And that's where most people struggle, Raymond. Okay, great question. All right, folks. Well, again, thanks again. And I appreciate it, folks. Good luck with everything and reach out if you have any questions. Take care, everyone.